Let's go live now to Evan Lucas. He is the Chief Market Strategist at InvestSmart. How are your blood levels at the moment watching the markets over the last week or so? Not only that, we've had GDP figures, the RBA all of this week. What does this all say about the economy?
Stimulus.
Stimulus, exactly. You're overstimulated, Evan.
Yeah, you can certainly say that again. And not only that, we're not the only place getting overstimulated is probably the word. So we heard on Sunday that there was going to be this globalised, synchronised movement around stimulus, and that's starting to come to a head. It's not as hard as probably I think the whole world was thinking. And what I mean by that is the Bank of Canada has now followed the RBA and the Federal Reserve to cut its interest rates. The Bank of Canada, like the Fed, was also an emergency meeting. The thing that didn't happen, the ECB didn't pull the pin, and nor did the Bank of England. So that's a little bit interesting, but it is all around the fiscal side and all around the fact that last night, particularly in the US, the markets reacted to two things. Yes, I think it has to be down with Joe Biden, the fact that it looks like a moderate will get on the Democrat side. That is clearly part of what most of the US people are talking about, but also the $8 billion that has been passed by Congress. It'll probably get bigger than that to support it. I did see your interview this morning with Josh Frydenberg, Laura, and that in itself is also interesting because we still don't technically know what it would look like here in Australia. And I think that is probably the more pressing question for us here at the moment in terms of why our market it's had a roller coaster ride, maybe not as strong as the US, but we still haven't seen the full extent of what will happen here.
Well, he said, Evan, it will be worth billions. He said, we're not going to make the mistakes of the past, so that would tell me that they're not going to put checks in the mail to individuals and it won't be economy-wide. But it's about the speed of getting this to business and how quickly they can get money circulating, right?
Yeah, correct. And I think it was worth billions in terms of its practicality was basically what he was alluding to. So, I would sort of hold on that. The way I look at it is that one of the first things you can do to really help that is to basically stop taking BAS every quarter. So cash flow was the other thing that he said in that interview with yourself, and that was the other thing that I really took out of that is that first way you can actually help cash flow is to stop taking tax immediately. So instead of doing it quarterly, maybe doing it even half yearly, or wait till the end of the year to do it. So that might be one of the parts of the packages that comes onto it. In terms of how they handle it, that will be very interesting in terms of how the package looks and what he says over the next couple of days. And I hope it is the next couple of days because we are already getting slightly behind what the rest of the world is doing. The other part of what's happening at the moment with markets is the RBA now needs to be very much in sharp focus, even though they only went a 0.25% on Tuesday. Most, in fact, if not all economists being surveyed say that they'll do it again in April. So that means we hit their terminal rate of 0.25% by the end of April or by the first Tuesday of April. And therefore, what happens after that is the next question. And that's what I think us as Australians need to start getting our heads around of what a quantitative easing Australian style will actually look like.
Evan, there's a fair bit of talk today about what's known as a business investment allowance. For those who aren't 100% sure what that is, can you elaborate on the detail of what that specifically means? Because that might well be something that's in that stimulus package.
Correct. So at the moment, and again, I'm not a tax expert, but I know what you're talking about in terms of the way you look at it is that you can spend up to $20,000 on investment in terms of tools and products for your business. And there is a tax-free threshold to that. So it actually therefore reduces the amount of GST that you therefore pay. That could get bigger, maybe go to 40,000. The reason that's a benefit twofold is that obviously businesses are consuming 40 grand is quite a reasonable amount of money when you actually put all the businesses together. So that helps consumption. It therefore picks up consumption. You also then have a stimulus measure from the fact that there is new product coming in as well, and that's creating a supply chain. So all that is why it's seen as a reasonable way of stimulating immediately, because it does, as I said, promotes spending, cuts down taxation, has more money in the business coffer, et cetera, et cetera. So that's one way of looking at it. It would be a small part of the overall package, I would assume, Peter.
Yeah, it sounds like a bit of an extension to the instant asset write-off scheme that we saw for small business as well. I wonder how effective this would be for big business and those big sectors of the economy that are affected by this. We saw the RBA last night, very late tell Senate estimates that their read on the situation is a 0.5% cut in growth for the March quarter. Josh Frydenberg wouldn't preempt what his Treasury will say to Senate estimates today, but it seemed like the RBA didn't didn't take into account manufacturing and kind of economy-wide. It was just looking at those sectors. So are we expecting this figure to be a lot worse? You know, when we don't know what the IMF said on the phone last night, but could it be a lot worse than that?
Could be. So the way I would look at that, so yes, the 0.5 out of GDP, I mean, we don't have much room to move anyway, would take us back, if you look at fourth quarter, to zero, quarter-on-quarter growth. That doesn't take into effect also the movement through the wildfires in the first quarter. And as you alluded to, Laura, manufacturing. Interesting though, manufacturing PMI for February was better than expected here in Australia. It actually expanded.
Why was that?
We don't have a huge manufacturing service sector, so just remember that it's a very, very small part of our economy. So that needs to also be put out there. It's the services PMI that you need to look at, and that is where a huge majority of employment and a huge majority of our overall economy comes from, and that was sitting at about 47. So that's a small contraction in terms of where it sits. So that filters into it. Again, looking also what will have happened, and we already know this, is that private expenditure, so that's private business, that is doing horrendously, and that was what was bad in the fourth quarter and will have got worse in the first because of the wildfires and now corona. Businesses will have been really pulling back. The thing that's also that needs to come into this, and what the wargaming, and that's what it is from the RBA, that needs to be also asked is around, and Josh Frydenberg said it as well, full employment. So the thing that's been asked at the moment is that small and medium-sized businesses, people going on their 14-day quarantine or longer than that, will be under sick leave legislation. So therefore, cash flow still has to pay for that. And then you have a scenario where there may actually not be anybody on the street to consume. Therefore, cash flow is slower again. And that's the biggest concern at the moment for the RBA, is how they keep full employment, but also make sure businesses don't run out of cash, keeping people in employment.
Okay, Evan Lucas crunching through the detail for us, and there's plenty of it. Evan, as always, thank you so much. Chat to you again soon.
Thanks, guys.